Namaskar and welcome to the Economic Brief, our weekly program on important economy-related stories in this integrated world of supply chains from an Indian point of view. On the program, India's air cargo is thriving as digital demand is making people want goods faster than ever. Japan's economy contracts for the first time in 6 quarters, shrinks 1.8% annualized in Q3 2025 amid inflation and US tariffs. Total Energies faces legal scrutiny over alleged rights abuse in Mozambique LNG project. And Jamie Dimon warns the US economy risks European-style stagnation amid overregulation and fading innovation. Before we look at our first story, let's listen to India's Information and Broadcasting Minister Ashwini Vaishnaw about the importance of social networks abiding by the laws of the land in which they operate. He was addressing the Bloomberg New Economy Forum in Singapore. India will be hosting this forum in October of 2026.
Social media platforms must start taking responsibility of what they are publishing so that the society at large doesn't get harmed by what they publish. Every company which works in India must follow India's constitution, must follow India's laws. Every platform must understand what is the social structure of the country in which they are operating. How does a platform react to the circumstances? How does it operate in the scenario, the diversity that we have in our country? That must be respected.
So let's look at our top story now, and we are talking about India's air cargo sector. It's thriving. Coming up behind me are some figures. A strategic shift in global trade dynamics is probably the reason for this, and Asia-Pacific carriers now are reporting 11% growth. India is a key contributor to this. India is expected, in fact, to grow year on year. This is by around 14%. Moving on to our next slide. So what's happening? We are having high-value exports of the pharmaceutical sector and electronics especially what people are demanding. And the exporters are also prioritizing speed over reliability. Not really because, it's not really a question of reliability because speed is reliable also today. That's another reason why exporters are prioritizing speed. And air cargo is crucial, in fact, for time-sensitive high-margin goods. And these are, there are so many of them. We can talk about design apparel, fashion cycles are very short. Then there is also obviously vaccines, biologics, there are specialty drugs, surgical implants. All these are very time-sensitive, high-value, high-margin goods. Especially in the apparel segment, the question of time sensitive is important because a fashion goes out of fashion very fast, and so you can charge high amounts of it only when it is in fashion. Moving on to our next slide. India adapts by shifting trade routes. This is another reason why we are seeing that India is able to deal with the tariff turbulence of the United States, because India has managed to create FTAs. There are markets that have expanded. We're no longer looking at the air cargo volumes you see have come down from the United States. Exports are diversifying. The exporters are diversifying markets. We have markets now in the global south. We are seeing Southeast Asia, Africa, Latin America also increasing in our exports. Moving on to our next slide. There are some tailwinds also that are helping India. We can see that, India's air cargo market This is expected currently at about 3.26 million tons, but India is projected to reach about 10 million tons by 2033. In fact, India has a target to reach 10 million tons by 2030. And there's a strong compound annual growth rate of about 11.5% in the air cargo sector. Moving on to our next slide. And we're talking about what are the drivers of this growth. And I said that earlier in the headline as well, is rapid digital adoption, and people are demanding goods faster. So there has to be faster delivery, especially in the strong in the tier 2 and tier 3 cities in India. So that is another segment where we can see that there is strong growth. And why is this happening? Because manufacturing is also seeing a resurgence because of this kind of demand, and it's driven by Make in India. We are seeing also MSMEs have been contributing to global supply chains. They are the exports of goods without oil. The non-petrol exports of India was about $400 billion. So we can look at India increasing its policies. Let's look at government support also. Policies such as National Air Cargo Policy. I was saying that the National Air Cargo Policy, it has positioned India, in fact, to be a major regional logistics hub. And the reason for this is that India has a target of 10 million tons by 2030. That is basically what the target is. And it has positioned India as a logistics hub because India is putting in a lot of investments into freight corridors and cargo terminals. That is basically the whole structure of the government support. Moving on to our next slide, and this may not be so important, people would think, but actually Afghanistan can also help in India moving its air cargo, because Afghanistan has slashed air cargo tariffs. This may be limited for the time being, but one sees that it has enabled the bypassing of land routes. That obviously is one of the concerns. But then it's also strengthened regional connectivity and logistics. But also because Afghanistan is also looking to try and improve its connectivity with the region and integrate its economy, looking at India, in a sense, in the air cargo segment. Let's look at the strategic outlook. India, as we are saying then, is evolving into a value-driven logistics hub. Clearly, this is an important segment, and tariffs are accelerating innovation and agility. That means the US tariffs are actually creating a new environment for India to be innovative, and the policies are agile. And also, it's strongly positioned India for the long term in terms of global competitiveness as well. So before we move on, let's listen to India's Civil Aviation Minister, Ram Mohan Naidu. He's expressing India's objectives for the air cargo sector. He was speaking to reporters outside the PHD Chamber of Commerce and Industry in Delhi.
India stands as a very bright spot in the aviation ecosystem. We are the third largest domestic market today. So with all these things, it is very important we make the right moves from now on. And two important things that we want to concentrate now is the air cargo network. We feel that considering the population and the demography that India has and the NRI community abroad, and the way pharma sector is growing and the way the perishable sector is growing in the country, it is very important for us to improve the air cargo situation. We see right now it is at 3 million tons to grow up to 6 to 7 million tons in the next 3 years. And by 2030, we want to reach 10 million tons. So for that, we want to, as a government, we want to make the right interventions in our cargo airports, cargo terminals, and streamlining the process so the throughput time for the cargo reduces and the viability and the economics around air cargo also reduces.
Well, Dr. Charan Singh, Chief Executive of eGrow Foundation, eminent economist, joins us. He'll help us unpack this story a little bit. Tell us, Dr. Charan Singh, how well is India prepared for this surge in air cargo? Do we need bigger planes, more airports? How do you view what the minister said?
I'm actually very thrilled with the report, and I'm also very excited about the trend in exports that's emerging. This is what modern India is. and this is where we are all aiming to be. If by 2047 we have to be Viksit, means obviously this is going to happen. The other thing that I would like to mention, while traditional international trade is generally through the sea route, the modern things that India is becoming, especially the pharma and a hub of smartphone production, obviously this is bound to happen that air cargo will take over the sea freight. Sure, for bulky things, we may still have to go for the sea routes, but I think for smartphones and biologics, the things that you mentioned, where India is modernizing and India is diversifying, this is bound to happen. So I'm very thrilled that the tariffs only made it go faster. Now,
Right.
if you look at the pattern of trade that is taking place, obviously, if America is going to impose tariffs and create the type of situation that it is trying to or has created, we are diversifying our exports. We are diversifying into Europe, we are diversifying into Africa, and therefore now we have, and with Europe, you see, we also have the landmass, and the aircraft movement is far easier, despite the fact that air freight cargo is about 5 to 10 times costlier than the sea route.
Okay.
Sometimes the products that we have, which are time sensitive and high
Yes.
value, the manufacturers are happy to lift it and the
Right.
consumers are happy to bear the cost. Now,
Absolutely.
Indian government, and that's where I think the government is ahead of the curve. The minister was speaking. The national cargo policy, which you also mentioned in your introduction, and the Prime Minister's Gati Shakti program, where you provide connectivity, you provide paperless movement,
Yes.
and then you provide air freight stations,
Yes.
something like the export processing zones are playing a very important role. I
Indeed.
think this is the way modern India is going to be. Though they have been speaking about targets, more than the targets, I think it's the trajectory which is
Okay.
very exciting.
Indeed, Dr. Charan Singh, is India then becoming that regional logistics hub which the national cargo policy is looking at? And, to what extent do we need to reduce costs? Because you did mention costs currently could be an issue.
Yes, I agree with you. I have a feeling that we are becoming a logistic hub. And the manufacturing that is happening, Samsung and those sort of smartphones that are being produced here, and pharmaceutical companies, especially after COVID, that the impetus that they got, we are. Or even on other things, we are becoming the hub. Now, as far as the cost is concerned, once we are able to have the Prime Minister's Gati Shakti thing, and once our corridor policies, our air freight and national cargo policies are in place, the very purpose is that you have the air freight stations, then you have the movement of goods, the infrastructure is improved, both land so that you come into those hubs, and also we are able to use the digital platform in a
Yes,
big way. Now
absolutely.
all these forces are going to help us in reduce the cost, in reduce the time, turnover time.
Yes.
Now once the turnover time is reduced and then we have the connectivity, the infrastructure improves, you'll find that this is bound to happen in a big way. Other thing that I would like to mention here is this also means a very bright future for aviation industry in India. On
Okay.
one hand, when we thought that the Prime Minister is talking about airports in remote parts of India, one thought was okay, he had coined the term Hawai Chappal se Hawai
Yes, that's
Jahaz.
right. Udan.
But many of us did not foresee that this can become a great supply chain.
Absolutely.
And the airports can help us in getting materials from one place to the
Right.
other in a far
Absolutely.
more
So,
fast time.
so
So
absolutely. So
I
the
think,
Udan scheme can also help air freight, is what you're saying. Dr. Charan
yes,
Singh, let's move on to our next story, which is about the Japan economy. Do stay with us, and I'll pick your brains on this story as well. Japan's economy has hit a troubling inflection point, contracting for the first time in 6 quarters amid mounting domestic and geopolitical pressures. The 1.8% annualized GDP decline in Q3 2025 reflects a complex mix of persistent inflation, sluggish consumer spending, and the fallout from US tariffs. Here's the report. Japan's economy shrank 1.8% annualized in Q3 2025, its first decline in 6 quarters. GDP fell 0.4% from the previous quarter, driven by persistent inflation, weak consumer spending, and US tariffs.
だから、一部の
Japan's economic condition is far from optimistic. Conditions for low-income groups are worsening. Directing public dissatisfaction towards external issues is the simplest way to manage it.
Exports fell 1.2% and imports dipped 0.1%, cutting GDP by 0.2 points, half the total decline. Private consumption rose 0.1%, while corporate investment grew 1%. Japan's auto sector, hit by US tariffs, lost around $10 billion in H1 2025, with all major car makers reporting profit drops. Despite these concerns, Prime Minister Takaichi took a firm stand that Japan would defend Taiwan if attacked, a statement that has a major economic impact on Sino-Japanese trade ties.
They're going to go to a flexible multi-year budget, but there's really nothing new in there, just increasing wages and saying that she's going to pursue strategic interests. This is a country that has a 20% exposure to China in terms of its trade. It would be devastating.
Her comments, made in mid-November, disrupted a fragile balance in China-Japan relations, which are shaped by deep historical tensions and economic interdependence. China's restrictions and travel advisory will lead to a projected $9 billion loss in tourism revenue over the next year. But it also could impact Japanese trade ties with Taiwan.
It is interpreted as a recognition that Taiwan and Japan share a common destiny, that Japan is stepping closer to defending Taiwan, and that there is a symbolic alignment of Taiwan's own position with Japan's plan to quote-unquote normalize its country. For this camp, Takaishi's stance appears to validate the idea that Taiwan is part of a Japan-centered regional community, not in the past, but also in present.
The Japanese government is balancing national security rhetoric with economic pragmatism, aiming to preserve trade and investment flows from China. Takaichi's administration is also preparing a large stimulus package to counteract the economic slowdown and mitigate the impact of reduced Chinese engagement. The Economic Brief, DD India. Well, Dr. Charan Singh continues to be with us. Dr. Charan Singh, can Japan afford to lose so much in the form of business from China and the United States?
I'm really worried about Japan. Japan was a very progressive country, and if you look at the way it was rising up in the 70s and 80s, it was almost about to overtake America. The Louvre Accord and the other accords which the Americans did along with the Europeans led to one lost decade, second lost decade in Japan. I really pity Japan. 40% of its population today is above 60 years. That means the fight back mechanism is not going to be there in Japan at all. So Japan economy is now really on a downswing. The tariffs have hit it very hard. And and your report also mentioned it, what happened to the exports. Well, Japan initially, before the tariffs were about to hit it, exported substantially so that they escaped the tariff war. Well, one of the reasons that you find the negative growth, and when you say 1.8% annualized, to some extent it is little less than the 2.5% or 2.3% that was projected and predicted by many economists. To that extent, it is little moderate. Now, my feeling is that they will bounce back. The problem in the Japanese economy is consumption. As I mentioned, that 40% of the population is above 60 years. Raising consumption, sustaining consumption, maintaining consumption is a real challenge up there in Japan. Right. But I think the new Prime Minister is coming out with various strategies. Okay. One of the important things that I think we need to learn is the interest rate. Should the Bank of Japan now do something with the interest rate? Firstly, it should not raise it. That was expected before this data came in, that they may raise it. So that is one thing. The other is one has to be very careful in what you choose and with whom you set up your relationship.
Yes.
Now, the problem with Japan is that it's a highly export oriented country. Now,
Yes.
this is something which we in India learned very fast. We went into Make in India, we went into Global Story, and we are taking care of the domestic production, domestic consumption. Of course, China has that challenge too, but I think the lesson that has to be learned from Japan, how much of export dependence should you have? And I think the lesson for all of us is that in the changed economic environment, in the
Yes.
changed geopolitics, in the highly uncertain global environment, you have to be inward looking, or
Okay.
call it reversal of globalization, or call it protectionism. But
Right.
there has to be within the country, you have to create demand and you have to have policies that are
Yes.
sustainable within the country.
We'll have to leave it there. Thank you very much, Dr. Charan Singh, Chief Executive of eGrow Foundation. Thank you for joining us and helping us understand these stories in greater detail. Our next story is the French energy multinational Total Energies facing serious scrutiny over its operations in Mozambique after a new legal complaint accused the company of supporting security forces involved in abuses against the civilians. Now, the allegations tied to its multi-billion-dollar LNG project are being reviewed by French prosecutors. It's a case that could reshape the global debate over corporate responsibility in conflict zones. Diptanshu Kashyap explains.
A stalled gas dream in northern Mozambique is now shadowed by a criminal complaint that strikes at the heart of Total Energy's biggest African investment. A European human rights non-profit has filed the case in Paris, accusing the French energy major of complicity in war crimes at its LNG project in Cabo Delgado. The allegations focus on abuses by a joint task force guarding the site between July and September 2021, after Total Energies had evacuated staff and handed the land to the state, with soldiers partly funded by the company accused of detaining, torturing, and disappearing civilians as Islamist attacks brought the $20 billion project to a halt.
During the summer of 2021, civilians fleeing attacks by the armed group Al-Shabaab were intercepted by the Mozambican army, including members of the Joint Task Force, which is directly supported and financed by Total Energies. Under the pretext of arbitrarily accusing them of belonging to Al-Shabaab, they were detained, arbitrarily imprisoned, tortured, and in some cases, forcibly disappeared.
According to the NGO, internal documents show Total Energies knew as early as May 2020 that Mozambican forces faced abuse allegations, yet still supported the Joint Task Force. French anti-terror prosecutors have received the complaint, while the company rejects the claims and cites an internal review that found no evidence. Total Energies says it asked Mozambique's Human Rights Commission to investigate. Meanwhile, reporting alleges up to 250 civilians were held in metal containers on the evacuated LNG site, tortured, beaten and killed, with only 26 survivors.
We are filing a complaint against Total Energies for complicity in war crimes, torture, and enforced disappearances because we have evidence showing that company directly, materially, and financially supported this special armed unit, which is believed to be behind the alleged war crimes. Moreover, Total Energies knew even before these war crimes were committed and possibly during what was happening. They should have acted and most likely should have stopped their direct material and financial support to this armed force.
The allegations also hit at a sensitive financial moment. Total Energies wants approval for a new budget that includes $4.5 billion in cost overruns on its delayed LNG project. Overruns Mozambique's government would need to cover.
Total Energy still hopes to restart its production by 2029, but the complaint adds fresh uncertainty whether one of the country's biggest investments can move forward. In New Delhi with camera person Naveen Kumar, this is Diptanshu Kashyap for the Economic Brief, DD India.
And the debate over America's economic future has taken a sharper turn. JP Morgan CEO Jamie Dimon is warning that the United States is drifting toward a kind of slow growth stagnation that's reshaped Europe's misfortunes. Diptanshu Kashyap tells us more, and we leave you with his report. Thanks very much for watching this week's Economic Brief. See you again next week. Namaskar.
JP Morgan CEO Jamie Dimon isn't just issuing another cautionary memo. He's sounding a national siren. In his view, the United States is edging towards a slow growth rut that looks uncomfortably similar to Europe's decade-long stagnation. Overregulation, stalled construction, fading innovation, Dimon argues these aren't policy debates anymore. They are pressure cracks in an economy losing its competitive reflexes, a system too slow to respond at a moment when the global race is accelerating. To Dimon, Europe isn't a comparison, it's a warning. He points to the continent's slide from producing 90% of America's GDP per capita to barely 65%, driven by the same structural drag he now sees taking shape across US states and cities. And he's blunt. Progressive, anti-business agendas, higher taxes, tighter permitting, expensive social promises may sound pro-people, but they shrink the tax base, spook employees, and ultimately hurt workers the most. The migration of companies to states like Florida and Texas, he says, is just the opening move in a far larger economic realignment.
I'd love to say, look what Detroit did. Cities have issues and problems, and it takes all hands on deck to fix those problems. You can learn a lot. I hope he calls.
Dimon insists the private sector must help pull the country back on course. He points to JP Morgan's plan to deploy up to $500 billion into AI, defense, and engineering over the next decade, not as corporate ambition, but as a blueprint for rebuilding America's productive strength.
For Dimon, the economic future of the United States hinges on whether it can restart its machinery of growth before it slips into European-style stagnation. The warning is clear, and the question is whether the system responds in time. In New Delhi with camera person Naveen Kumar, this is Diptanshu Kashyap for the Economic Brief, DD India.